Hello everyone, this is Evan here from the Trade Risk on Friday, September 23rd with a weekend market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, and then finish off the video looking at some individual names. Let's jump right into the action this week. S&P 500, the SPY ETF, finished up 1.23%, a nice rally this week, and this is following up the Fed meeting and the BOJ out on Wednesday. Markets responding, of course, now favorably in hindsight to those announcements, to those statements, and we did see a close not at the highs but near the highs of the week. Let's take a look at where we are. This is a daily chart of the SPY ETF zoomed in here, and you can see we came into the week right here at this session. So we entered the week about at 214 with a small gap higher, and we finished the week almost 2 points higher at 216. Now we chopped around before the Fed decision, before the BOJ. This candle right here Wednesday, right, this was the igniting bar higher, resolving us above this 215 range and then breaking us back into retesting this old kind of sideways range that we were in for multiple weeks back through essentially all of August. Following that, we just traded back down, filled this gap on Friday. We closed weak on Friday's session right near the lows. That's not ideal. Would have preferred to see a bit of a bounce into the close. We didn't get that, but I think heading into next week, what we want to see is if this market can sort of stabilize right above 215. You don't want to fall back down into this old range that we traded within for about that 6 and 7 days prior to the Fed. Basically, this line right here. If you start to kind of fall back into there, it'd get me a little more concerned that the short-lived bounce is basically just that, just a short-lived bounce, and it doesn't have more meaningful legs behind it. So heading into next week early, that's what I'm going to be looking for to see if the bulls can kind of step in here at some of these fast-moving averages and push us back to the top end and retest and hopefully get through this 217 level to the upside. The other concern here is putting out all the bearish sort of evidence or views points on this market right now, is the shape here that it sort of resembles this head and shoulders kind of top that we're in. And I know it doesn't have the all that nice curvature that traders like, but more or less you can kind of see what I'm talking about here with the left shoulder right there. You got the head up here, and then if we make a lower high here, that could be a little concerning. And again, I don't care if the pattern's not exact. You can label it whatever you'd like. The point is if we make a lower high here, fall back into this range, retest this support, very quickly, we could be opening up to, once again, the bearish sort of scenario of a potential break of support, and then all of a sudden, you're falling into the abyss down here at 210 or something below that. Once again, I'm not predicting this. I'm not even saying it's the likely scenario at this point. I'm just keeping an open mind, being aware that, we do have sort of a reference point pivot of Thursday's highs now at a interesting point within all of this recent price structure. Now let's go to the weekly chart and show you the optimistic side, the bullish side, is look where we found support right at the 20-period EMA on the weekly time frame, and this is also the prior breakout that we've talked about for multiple times. So essentially saying we retested those previous 2015 all-time highs, we found support there, and we're in the process of bouncing. That's very constructive. So you got both ends you can kind of look at this market from. We're not out of the woods yet, but I do believe, I'd have to say at this point that the bulls certainly have a bit of an edge here. They have the upper hand. It's their game to lose at this point, which once again is why I really want to see us hold above this 215, 215.50 area heading into early next week. Final note, breadth. Pretty constructive. Friday, of course, was nothing glamorous for the bulls, but constructively, new highs are once again back on the rise. You're seeing the cumulative sort of advanced decline line back at trending at highs. So you have some positives on that note. The other real positives here. So SPY is definitely the weakest link, and we've talked about that. Let's go to the Qs. This is where you want to be optimistic in saying that the resolve could be higher here, or is the more more likely scenario, you have the Qs, while not closing at the highs of the week, closing at new all-time highs. We resolved this range of about 6 weeks or so sideways to new all-time highs, taking out prior resistance. Once again, didn't close right at the tippity top highs, but that's still a very big win, very big bullish signal to be net making new all-time highs here in the Qs. And the IWM, the same, is making, or it did make, a new 2016, new year-to-date high. So very constructive there that the IWM and the Qs, quote, the riskiest or the riskier of the three indices, making highs and taking out prior resistance, quicker at a quicker pace than the S&P 500. So all that's pretty much food for thought. I think to sum it all up, you have still not out of the woods. You have kind of the mixed cross currents depending on where you live and how you're thinking about things and your time frame. But I'd still say, especially looking at the Qs and the IWM, the bulls have the upper hand here. Stick to technology. Stick to some of those small cap names that are working. Pick your spots. Avoid the laggards in the S&P 500. We'll go through some of those sectors in just a moment. Let's start looking at some other markets here. TLT also having a nice snapback on the week, 1.5% to the upside on the week. You can see, I'm not sure where my lines are here. I've been having some issue with TC2000. Connection issues. I don't know why my lines aren't here, but you get the point here. We broke down, right? We came back down here, found made a low down here right around 133. We're now back into this old gap, and this is going to be a very challenging level. This 138 level, this was the breakdown level. This is where all this overhead supply sits. Can we, is this just a potential nice risk to reward short setup as we retest the bottom end of this range, or are we going to punch through it? We'll have to see next week. USO also coming back into this range, and again, I don't have lines here, so certainly something wrong. Once again with the software here, and TC2000 is pretty stable, so I don't want to badmouth it, but USO, so you can see, just continues to consolidate, getting pretty actionable as this continues to tighten up, right? You get this trend line coming down from the highs, you get this sideways level right here at 10. This is going to be interesting to see which way this resolves, so keep a close eye on that one next week. UNG, this one unfortunately stopped us out today for basically a scratch on the trade, a tiny win. We remember we got into this here on this day here back last week, playing for a breakout. Got very close to our first target up here, but it stalled right at that $9 level and just couldn't punch above it to take some partial profits. And unfortunately, we had to exit this for just a fractional gain, basically a scratch on the trade. Structurally, depending on your time frame and your and how wide you want to keep your stops, this is still quote breaking out the weekly candle. Certainly not ideal. As you can see, it couldn't really make any forward progress this week, and you get a nice big topping tail on there. But the weekly trend is still to the upside. But we'll have to keep a watch on this. Something I'll be watching again for a re-entry. But for me, the upper level momentum, just with that second day following through lower, not somewhere that I want to hold it overnight, given where it is right now. So we'll have to reevaluate next week. What else do we have? We have gold, which continues to consolidate. Had a nice little bullish pep in its step though this week, 2%. You can see nice consolidation pattern here taking place on the weekly time frame. You want to keep a close eye on that. Silver also consolidating, but getting a nice push higher this week, up almost 5%, so a little more juice in this one. You can see also nice weekly consolidation pattern going on there. Could be both of these, just nice continuation patterns in a uptrend on the weekly chart. So just be aware of that. Daily setup maybe is not there yet, but the weeklies are still in a pretty good, powerful formation. With that, let's kick it into some of the sector breakdown here. Technology, no surprise, right? Continues to lead here. Looks like the Qs, but this is certainly where a lot of the leadership is. Semiconductors right alongside of it. XLU also just had a really nice snapback this week, obviously with a no-go on the hike interest rates by the Fed. You're getting that old kind of existing trade looking for yield in this market, which got a nice pop in the XLU, broke this trend line. That's been in place for a couple of months now, so you're getting a little bit of snapback there. Maybe it can push all the way back to these previous highs here, something to pay attention to. Also, biotech continues to be strong. IBB closing near the highs, back at these August highs. This is a trade that we've been in for quite some time, or at least a week now, and this continues to work nicely for us, up 2% so far. But you can see it's at a resistance area, needs to clear this nice round 300 level, then it gets some legs behind it. The equal weighted XBI is outperforming, up 5% this week, and it's trending to new year-to-date highs. So not quite year-to-date highs, but close to it, and new recent highs for sure. XBI continues to do well. On the downside, some of the sectors to avoid, or at least aren't showing tremendous strength recently, is staples is one. You can see just on a relative basis compared to these other sectors, this is still kind of down here below the 20, just hanging out near these lows, near support. Hasn't been doing a whole lot. Materials, they did have a nice day here on this Wednesday, Thursday, this kind of 2-day snapback here, but relative positioning basis here, there's still a little bit of a cause for concern. You can see the 820 still kind of sharply in that bearish formation. And then financials are just kind of hanging out, not terribly, not terrible, but certainly not in front leading or anything like that, leading ahead of some of these other sectors. So it's a mixed bag. I mean, you have leaders in here like JPM, which already got back and tried to take out the previous highs. And then, of course, you got Wells Fargo, which is under pressure, and some of these other guys that you can kind of go through, but it's a mixed bag there in financials. Looking at some of the individual names here, we'll kick it off with Apple. I know it had a little bit of a volatile session here on Friday. I really don't think it should be overblown. I think I saw a lot of kind of panic here in Apple saying, well, this is, this was all overblown and this is kind of the end of it. I think it's opportunity in Apple. I mean, I don't see how you could interpret it much differently. You had this massive, perhaps, in the short term, again, getting overbought. 11% 1 week move in Apple is tremendous for that size company. But now giving back 2% is extremely healthy price action. I mean, it can come all the way down to 108 and still be just very much healthy, buyable dips and have a constructive kind of look to it. So Apple, yes, maybe just needs another week or two of just consolidating, but to me, it looks like opportunity. No trade, no position in it, but it is interesting. Google closing at new all-time highs this week, something that we got involved in. We have a position now in Google, so we're long the name. Just looks great. I love these patterns where you have bigger, you have a big wide base that took place over, a long period of time. Then you have a breakout above it with this small kind of mini base, this base on base action, and a breakout now to new highs. I like it. Google looks strong. Amazon also very strong, making new all-time highs this week, above $800. There's a lot to like there. Facebook got hit a bit on Friday. I know there was some news out on how they calculate video ads or something along that. Didn't pay very much attention to it, but it did seem to react a little bit to the stock here. Below the 20 period, maybe this leads to something bigger. You broke kind of this accelerated little trend line here, so we'll have to see on Monday if that gets followed through selling, or if we can just remount this trend line and just sort of be off to the races. Twitter on Friday, of course, though, I think this is obviously the big story, the big news, the big winner, up 21% on rumors, just rumors still, that this could be a takeover candidate. I think we've seen this quite a bit, but clearly not with so much. This is clearly met with a little more interest or credibility behind the volume and magnitude of this move. Importantly, it closed near the highs, so that's constructive. It held in there all day. Also, I was looking at this the other day, and once again, you got to kind of squint and look closely at it, but you have this little sort of inverted head and shoulders pattern here, and again, it's not perfect, and it's really, it's just the psychology that I care about, not what you want to label these patterns here. But this is a pretty big potential bottoming pattern here. You can see that with this neckline. We're above it. I don't know what that measured move gets you to, 14 to 20. So what does that get you to? $26 more or less. So maybe there's some more fuel in this to get up to that level. So you also kind of had this measured move. if you like to just take the swings and project them on to where we could get to, you could see that's kind of where the highs of the day were. So, there's some constructive action. I mean, clearly up 21%. It's going to be interesting to see if this carries momentum into the weekend, if there's more news on the story, and certainly will be in play for at least a day trade. I don't know if you could want to jump in here now, new money on a swing trade basis, but you'd have to make that call based on your strategy. And let's just end it there. So we'll call it there, and thanks guys for watching. I hope this video was helpful. Remember, if you haven't subscribed to this channel, please do. Bottom right hand corner, stay up to date with all the videos that we put out. As always, thanks for watching. Have a great weekend. Talk to you guys soon.